Down day to day. Let's go over the results. It was minus 5,100 on the 250K portfolio and minus 635 on the 50K portfolio. We underperformed the hypotheticals by almost 2,000, and the reason why is on the server, this trade did not show up on tick reversal. Even after I turned the strategy off and then on, it did not show up on the E-mini Nasdaq, but it shows up on the micro. So the micro took the trade, the E-mini did not take the trade, and after the fact, on my research platform, I see this trade, but on the live server, this trade is not there. So there must be a data difference. I thought I was connected to the same data servers, so I'll have to research that further, but sometimes that happens in trading. And another good reason to start in a drawdown to be in a situation where you can overcome technical errors like this or drawdowns. And so we're up on the month though, 12,676.50, up on the year, 28,627, $14,000 drawdown. It's kind of a paltry market, just very slow. Market moved higher and then it sold off slowly all day with no bounces. And so Viper got in here, stopped out, and then tick reversal 2023 had one trade, it was stopped out. And then on our live server, we had these two losing trades. On the research platform, we had this winning trade. So those are the only three strategies that traded today. So only three NASDAQ strategies traded. No S&P strategies traded at all today. So momentum reversal didn't capture the trade. Market internals were interesting because as the market moved higher, when it was up here, I expected to see the advanced decline line up at 1,000. I'm going to add the advanced decline line. So I expected to see the advanced decline line. You see it up here. It was moving higher. It made three highs here, and each time it went up here. It didn't make a high there. It kind of made a little bit of a head and shoulders here. This is the high point. These 2 points are lower, but as the market tried to rally each of these times, the second and third time, the advanced decline line kept moving lower. Sometimes that means the market will surge and then the advanced decline line will catch up. On a day like today, the market rolled over and the advanced decline line continued, and it was surprising to see the weakness in the advanced decline line. The Russell 2000, if you look at that stock index future, it ended up rolling over all the way past Friday's lows. So it took out Friday's lows. NASDAQ was up here, rolled over. Russell, NASDAQ came into Friday's close while the Russell took out Friday's lows. It really diverged. And the Russell 2000 stocks in it really is in sync with this advanced decline line. And so it should be interesting to see what happens tomorrow. This low volatility, though, we talked about this last week before this rally. Low volatility tends to favor the bulls, and so this pullback is normal. We had two big up days on Thursday and Friday with really good gains. Gave some of Friday's gains back today, and then we had this, low volatility, steady but low volatility pullback, and then wouldn't be surprised to see a gap up overnight and the move higher because of the nature of volatility right now. And so these are the chopper strategy results. Opening chop was down on the day. Opening chop 2 was down on the day. Tick count trend turning around was up a little bit on the day. I'm looking at potentially this strategy, and this strategy to add to the portfolio. I'm going to show you the results here for that. So here's the latest portfolio calculator. We are ahead of these results in live trading because we waited for a drawdown to start in February. And you can see this worst case drawdown and then a bounce that we captured. And so these are the latest results I've added. If you expand this, I can't click on this now for some reason, but you should be able to click on your site. You can download the latest portfolio calculator under portfolio calculator, and you can see these new strategies that have been added. I'm still working on licensing and testing them, and we'll send them out soon in hopefully the next day or two. And let's look at what would happen if you added those three strategies. So this is as of Friday. This is not today's results. I haven't compiled today's results. But if you come in here, you see the worst case drawdown goes from 30,000 down to 24,000. and you can see we preserved that worst case drawdown. It's done much better. Let's see what 24,545 is the worst case drawdown right here, I believe, and that is April of 2020, and that is right in the middle of the pandemic, and you can see there are many strategies that have developed that they start working really well in either March or June of 2020, and we're kind of in a new era here post-pandemic. It's pretty obvious. 2023 so far is also a little different than 2021 or 2022, but you see these chopper strategies, they start doing really well at the beginning of 2022, and so you get more mean reversion in the market. We had lots of volatility. Now we're moving towards mean reversion, and so we're looking at adding potentially these three strategies. I've placed them all in the portfolio calculator, and I'm still double checking, make sure the data is correct. But if you use a tick count trend dynamic turnaround opening chop and opening chop 2, you get these results where we still preserve a worst case drawdown, and we're still ahead. We're still, because we started on a drawdown, we're still in sync with this setup. So not on the year, but on the drawdown. And so that is what I'm looking at. Once again, I'll have more information once I'm done licensing and double checking this. These are the latest trades on the day for Monday, March the 6th, 2020.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.